And you see, that's why the theory that I had and a number of people I worked with in Mexico thought that it's exactly that. And we weren't thinking it was culture. Remember, I'm an economist, not a sociologist. We thought, though, it was the bankruptcy laws. And it was the very, very weak bankruptcy laws. And you saw in the 1994-95 crisis that that people there had been a spirit of lending in the early 1990s, and people had to pay back mortgages and couldn't. The bank went to repossess the property, sometimes in very nice neighborhoods, and people formed vigilante groups to go and tell the judge that if he ever ruled on the side of the bank, the finer people could make sure he'd lose his club membership, but other people would come and shoot him. So you are entirely right that there was this period in the 1990s where the banks were being paid back, and that's certainly the excuse that the BBVA uses, why they won't lend. Mexico tried to do something in 2000. I haven't showed you more of the recent data, but it hasn't worked. And I don't know if that's because the lawyers messed the reform up, or maybe there's something different. So I don't have a good answer to your question, but certainly the problems with bankruptcy are a huge part of the banking problem.
Excuse me, have you looked upon the relationships between interest rates and productivity? Here, we've lived through a period of very low interest rates, very low real interest rates, and somehow you said that it was a misunderstanding of the risk of the low interest rates in the construction building or in
right.
the real estate. Of course, I think I don't know if it was the understanding. It was not the misunderstanding. It was the fact that it was already there. And how did that, you think, it affected productivity? Because we've gone through some years of not growth in productivity with very
right.
low interest rates,
right.
and with the perception of that was with the perception that this was a potential, so to speak, cause of a crisis. But as long as the interest rate is low and as long as there was credit available from all sources, then it's
right.
very impossible to tackle on the perception and understanding of risk, no matter how you can do it.
No, and you're certainly right. And I didn't want to overly simplify the problem. What we've seen over the last 10 years is that the United States and Europe has had low interest rates overall, largely because the Chinese have lent so much to us. Certainly the situation would be far worse if the Chinese would stop right now and interest rates would go up while we're trying to recover. I didn't want to make there be a simple connection. What I was trying to say here was that there should have been an interest rate premium on certain kinds of mortgages. So that in the United States, in the late 1990s, and let me confess politically, I'm a Democrat, and a lot of this started under Bill Clinton, gone back even before, but the big massive amount of lending started under Bill Clinton, but continued under George Bush's administration. And there was a kind of consensus in the United States, every American should own a house, even if they don't have a job. What would happen is that there were these government guaranteed loans through Fannie Mae and Freddie Mac, but there was just more of a general policy that, on the part of banks too, that you have to lend out to people to buy houses, and that's going to be a safe loan because the housing price is going to go up, and we're not going to have to look too carefully at the risk characteristics of each individual. So I tell you, just last year I refinanced, my wife and I refinanced our house to do some building. And we had refinanced it earlier in the decade just to get low interest rates. Wow, the situation's different. I had to spend 4 or 5 days getting all the documentation, all the proof that I was a good risk and so forth. 8 years ago, I just went in and boom, I walked out with a few $100,000. And that's the kind of thing that getting this risk done right was something that we weren't doing in this bubble. I think having the Chinese lend to us, that was pretty good. I'm not opposed to that. Not sure if it's good for them.
So linking with the last question, you can have a switching of resources from private activities that are productive to public activities that are not so productive. You can have also sectoral switches of resources that go from sectors that are very productive to sectors that are not productive, like the case of Spain. So that line that was flat is precisely due to the fact that most of the financial resources were being switched from sectors that were very productive to sector, or at least more productive to a particular sector which has a negative growth of productivity, which was construction. And the more you put there, but what it means is that you don't have to have a government to do things wrong. I mean, you can do it wrong, by yourself, just by having interest rates that are, too low, are not priced properly. That risk not priced properly in the price of the assets if you have a market-based
Right.
finance.
This, although, you see, this I did not want. What I don't want to do is blame everything that happens in the economy on the government. This picture has no Great Depression in it. So none of what I said particularly applies to this picture. I think some of the movements in hours worked has to do with government policy. The productivity I don't fully understand, and I think that your idea there could be a very good one, and that could be market driven. We have to always remember real GDP, the way it's conventionally measured, is not a good measure of output. Maybe having the Germans come in and buying up places we built from on the beach, maybe that's a great thing for our welfare, and it just doesn't show up the right way in real GDP. I'm not disputing that at all. What I was saying, to get something horrible like the Great Depression, I'm looking for potential culprits inside government policy. And I'm willing to entertain your hypothesis for that. But it's really amazing, isn't it, how since 1995, productivity in Spain's done nothing. It's 14 years of no productivity growth after spectacular productivity growth. So that's something certainly, I'm not an expert on this.
That's why interest rate must have done something to it. Let me ask you another question.
Okay.
If anybody, what you think about Keynesian comeback of ideologies in the politicians to fight back crisis? The ideological comeback of
Right.
Keynesians and the effectiveness of those crises in the different types of crises. Now we have you have a good spectrum of crises. You have as many crises as countries there are in the OECD world. So
Right.
you only have to go to the past. You can do right now a cross section of different behaviors.
Right.
So what do you think that when and how that could be of use, and when and how that could be a mistake that could lower or make crisis longer?
Let me confess to being a bit surprised to